Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. I hope you're having a fantastic day. We're taking a quick look again here at Bitcoin, seeing what's going on. Just gonna double check some local resistance ranges. We may draw out some new fib levels and just kind of talk a little bit about this bull flag pattern here. I've got a lot of questions regarding this. And then obviously too, just kind of understand best practice, big picture with the back end liquidation data here. So again, we'll take a look at everything, help you make an informed decision, I hope. And again, if you are new to the channel, once more, CryptoCash.tech is a site linked down below where you can learn to become a better trader. Heads up, my new Plus bot, we got some new additions there, new updates. I'm going to be posting that here later today. Some new strategies. So far, it's been very, very profitable on just a small little trading portfolio. So again, cool stuff there. We'll be able to check that out. I'll provide that here shortly. Feel free to hit the like button, comment below if you get a chance to as well. Really appreciate that. So when we take a look here at liquidation, we can kind of recognize there's, in the last 7 days, we're starting to fill up. Okay, we're starting to get that pretty significant range above and below the price action. Granted, there's a lot of liquidation below the price. Each one of these red bars is about $1 billion. So unfortunately, we got these high leverage longs just below the price action, about 95K. They could be the reason for the price to pull back. Okay, now again, I'm not blaming on, I try not to point fingers in this market and be like, oh, it's manipulation, or the price is going this way because market makers are greedy. Truth is that really is what's going on though, and it's difficult to manage from a larger term perspective, at least depending on who you are and how you trade, right? Well, a lot of my traders have been having some difficulty with that. Even myself too. I mean, last month was not a super profitable month. I mean, it was still good, but not quite as what I'd liked it to be. So the whole point of me mentioning that is that try not to be a high leverage person. I'll replace the word idiot with person for now, and just make sure that you do the right thing and try not to get too crazy with leverage, because again, that's usually the reason why these positions are destroyed and the price action moves the way that it should, because too many people are leveraged at any given time. Right now, we got a lot of leverage down there, so that could incentivize the price to come lower. For right now, we just came up and tested this $100,000 mark. We swept a decent chunk of these late shorts here, and there's potential to go even further higher. So based on a momentum standpoint, there's more likelihood we're going up. We're going to break this descending trend line and continue further up, but still a little too early to tell. But either way, that's more positive than negative here in the sense that we're more likely to go higher, but just recognize 95K does have a pretty big target on his back. So all that being said, where are we at here now? Well, the truth is, from a macro perspective, there's a lot of liquidation right in the 105 to 107. No, sorry, 109 to 107 range. Okay, so there's a lot of liquidation there. That's the closest, most immediate concentration outside of 85K. So please note, from a macro perspective, we're still not quite into these larger ranges. We more so have local liquidation, and that can incentivize the price to go in either direction. Right now, though, this is interesting to me how many longs we see here, and it's reflected on the liquidation chart we just looked at. But there's more people taking longs than shorts right now in this range, which is both good and bad. It's mostly good because we're on the right side of tracks, and taking a long makes more sense because everybody feels like the price is going to go up. However, we're moving into a resistance range. That $100,000 level is proven to be a very strong resistance, so we're going to need a lot more volume to continue that. We'll look at the charts to see if there is more volume, but for right now, we're above pretty much all these local areas of control. There's some late longs at about 98.7, and there we go, 99.7 as well, some late longs there too. So try not to be a late long, but at this point, again, easier said than done. I get it. A lot of people are trying to breakout trade, which again is not necessarily super successful. So what does that open interest tell us? Well, it tells us that we're mostly above majority of volume. So not only do we have a good liquidation delta that is green, basically telling us we have good momentum to the upside, and that we have more sustainability to the downside, we've got this potential shift in momentum here occurring. So for the most part, that's a very positive sign. I would say the back-end data looks mostly good, except for the simple fact that we have, again, that large liquidation chunk at 95K. So we start progressing lower towards 96, I think it'd be safe to say the price is going to go down to sweep that level. But if you look here, and it may be hard to see in the charts, but this blue area, that's where majority of the liquidation was at, and roughly half of that got swept. So again, that's half the reason why we're seeing a bit of a jump there, because a lot of that volume has subsided. Okay, so what's that tell us here for the daily time frame? Well, Simple way to understand it here is we're below the 20-day SMA, basically the volume weighted moving average. We are under the 50 as well, so we need a solid closure above 99,000, as I've mentioned before, to give us good incentive to push the price action higher. But at this point here, we're still in this bullish flag pattern, and it's not really good nor bad. We're kind of breaking bullish, if you will, but we haven't yet, okay? We take a look here. We're still under 50 on the RSI until we close above that. Again, we need a solid closure, in my personal opinion, 100 to 102K or higher to get that consistency or that that back on track feeling, if you will. Okay, because as we can see here, I don't know if you can see that candle wick, but we wicked up to $100,000 almost even, and the price rejected out instantly. Now, if you look here on the 4-hour time frame, you can see the 50, the 200-day SMA, both hanging out right there at that $100,000 range. The 20-day SMA and the volume weighted moving average, the VWMA, those are both underneath the price action for right now. So again, closing above 97.7 could incentivize the price to continue higher. More importantly, if we close above this descending type of trend here, we're going to be in pretty good shape to see the price continue further up. Okay, so again, this bullish flag pattern, the reason why it works is because it continues to build a base at generally a key level support. It can be kind of, usually it's going to be like the 0.618 to 0.65 level, which we can see here. Right there, price bounced off 0.618, held the price action there at that 99.5 range, sorry, 96.5, and continued higher from there. So again, this is very standard bull flag material here, right? Now, it's not a guarantee the price is going to continue higher. It just implies that if we were to pull back, we need to see like a higher low and then the price go up higher. So if we get lucky, you could get along at 97,000. Okay, that would be a best case scenario. But again, it could continue lower too. We can't just be blindly thinking the price is going to go up. However, these are generally favorable signs here for the moment that a breakout is inevitable. Again, that's why when you see here, you look at liquidation delta, it's like basically stagnant. When that occurs, it implies that there's a lot of indecision at certain levels, which we're seeing now. And that's just like the Bollinger Bands. They start to compress, they start to squeeze together. We're going to see an explosion in either direction. And that's what we're looking for here. Strong likelihood we're going to see 100,000 versus the 95K first. That would make more sense based on A, momentum. B, we're right here at 50 on the RSI, soon to break that resistance range. Money flow index is high, stochastic swinging up, and MACD is converging. There's basically everything except for these two SMAs at the $100,000 range that are telling us a long position makes a lot more sense. Okay, hourly time frame. Let's quickly note here from Ichimoku Cloud perspective. This is where things get pretty interesting. We've got, first of all, lagging span is not free and clear of the price action. Well, it kind of is. It's right here. But again, it's mildly free, if you will. We are above the cloud, or within the cloud rather, but closer to the upper lead, that's positive, and the conversion line's above the baseline. So the simple way to understand this is that we don't have a full-on perfect situation for a breakout here. We've already kind of broken out, and we got to see if that retest occurs. Okay, so the key takeaway here is we cannot establish a lower low. That's the key takeaway. So once we get closer to that 96K range, if we do, that's when things get kind of scary. So in a perfect world, we see a bounce off 97K, that local low, and essentially continue higher up, because it's very, very important that we continue to establish higher highs and higher lows. So we're looking at an interesting situation here. So the simple way to understand it is the daily time frame is breaking bullish. 4-hour time frame is mostly bullish. The hourly is kind of getting some fake outs here or some false positives, which I don't love, but it is par for the course. So generally speaking, I would recommend waiting on taking a trade. Let the candles close today at 99 or 100,000 or higher. I think that'd be more appropriate. Because again, taking a long into the weekend, lately, we've seen a lot of red weekends as a result of a Green Friday. And with this happening here today, there's a decent chance we could see a correction this weekend. So just be mindful and pay attention here, folks. I don't think we're quite out of the woods yet. While this is nice for altcoins and a lot of them are recovering, Bitcoin dominance is still ridiculously high. Okay, until it starts to taper off, Bitcoin is calling the shots right now. Simple way to understand it. It's absorbing all the volume and the liquidity. Okay. All right, folks, that's all we got. Thanks again so much for watching. Hope you learned something today. Check out my Twitter, Telegram, and Discord for an updated playout chart. I'll have that up here shortly. Okay. Have a good rest of your day, folks. We'll see you in the next one. Take care.